What is up, YouTube, and welcome back to another Fridge Financials video. And in today's video, we are talking the 4 new IPOs that you can get invested in with Robinhood. So if you're excited for today's video, make sure that you like the video, subscribe to the channel, and as always, feel free to turn on those notifications so you don't miss any future uploads from Fridge Financials. In today's video, we'll be breaking down the 4 new IPOs that are listed on Robinhood, pros, cons, which ones I would like to get into potentially, which ones I'm staying away from, and kind of going from there. And again, as a reminder, none of this is financial advice. Please make sure you do your own research before investing. So the first one that you see on my screen that we're talking about is called Figure Tech. Now they're targeting a $4.3 billion valuation in September, fueling crypto's public frenzy. We're going to talk about what Figure Tech even is, what I want to compare them to, and looking at their financials that we're taking a look at here. So first off, starting off already with some keywords here: blockchain based, crypto baby. Okay. We've been having quite a few IPOs with Circle IPO, which was crypto based. We had Bullish, which was a recent one that was also crypto based. We have another one coming out as an IPO that's crypto, which is Gemini. We'll talk about in a little bit. So that's been like the hot topic, the hot commodity, the hot trend of 2025 has been digital assets, stable coins, those kind of things, you name it here. So block-based lender Figure Technology Solutions is preparing to go public this month in one of the most closely watched listings in the crypto fintech sector. Okay, the company and its backers are seeking to raise up to $526 million through an initial public offering, according to a filing with the U.S. SEC. According to a Bloomberg report, Figure plans to sell 21.5 million shares priced between $18 and $20 each, while existing shareholders are offering an additional 4.9 million shares. At the top of that range, the firm would command a market capitalization of around $4.13 billion, surpassing its $3.2 billion valuation from a 2021 venture round. So the venture rounds are those private funding that you see, those seed rounds potentially, and now with being able to go public, you're able to raise more capital to hopefully grow and expand your company as a result. Now, with the IPOs, they say they plan to list around $18 to $20 each. What tends to happen sometimes is these prices might go up or down depending on the demand of the shares that are being purchased or being requested. So if a lot of people are requesting shares, those prices might bump up a little bit. I know Bullish IPO, when I got into it, it was like $30. Then it got bumped up to like 34. So again, it is a possibility that you're not going to get 18 to 20. You might get 21 or $22 each, depending on how the popularity is as a result. So the company is planning to put its shares on the market on September 10th. Trading set to begin on the NASDAQ under the ticker symbol FIGR, not to be confused with Figma, which is just FIG. Really confusing. Now, what is Figure and what is the reason behind it? They were founded in 2018 by Michael Cagney, the former chief executive of SoFi Technologies, which makes a lot of sense because what I've started to notice a lot is SoFi's had a crazy run up recently this whole year. So SoFi is up 66% year to date here, up at almost $26 per share. And you take a look at how SoFi works. They do a lot of lending and mortgages and consolidations and things with, debts and all those kind of things, restructuring potentially. And you also will see that usually when crypto does well, SoFi and Robinhood tend to follow suit with it. So it's kind of giving off that kind of vibe, which makes a lot of sense as to why, because this guy right here was the former chief executive of SoFi Technologies. Makes a lot of sense. The firm began with home equity line of credits, which are called HELOC products here, basically being able to take out a loan against your house that you have on a mortgage, basically, and has since expanded into crypto-backed loans and digital asset exchange. Okay, we're going into crypto here. To date, it has originated or purchased more than $16 billion in loans on-chain. In August, the company increased its HELOC borrowing limit from $400,000 to $750,000 to capture a larger share of equity-rich homeowners. That's bullish already, being able to increase the borrowing limit to be able to reach those more high-valued, clientele, homeowners, those kind of things. That's huge. It'd be one thing if it went from the bigger to the smaller, but now you're expanding, you're trying to get to those higher, equity-based positions from these homeowners here. That's pretty big, and that's going to signal some good money coming in from those, more wealthy individuals, right? Now, not only that, but Figure has also moved into artificial intelligence. 2 words there, or 2 keywords, again, that you see: artificial intelligence. We also have blockchain, so it's like just the best of both worlds in 2025. Using OpenAI's technology to evaluate loan applications and Google Gemini's chatbot to improve customer interactions. All right, cool. Again, if you're not using it, you're going to fall behind. So love it. According to its filing, customers have for partner brand HELOC loans in the first half of 2025 has a weighted average FICO score of 756, slightly higher than its 749 average for its own branded loans. So again, thankfully, having a weighted average of 756 and even having this weighted average of 749 means that you're able to get quality people who could pay back their loans, right? That's the big thing with HELOCs and stuff like that. Because again, if you don't pay off if you take out a HELOC and you don't pay it back, that can put you at a risk of a foreclosure on your property, which we never want to see people happen, obviously, because that's the housing market just going down. If we had a lot of people defaulting on their HELOCs, stuff like that, and then, they get foreclosed on, then what happens, right? So in this time of the year, it's a little bit tricky with, how the jobs markets are going and inflation and rate cuts and all that kind of stuff like that. So it's good that the FICO scores are around 750. That's really good. It means that they are really good at paying back their debts. For the most part, anyways. The company's growth trajectory has accelerated in 2025. For the 6 months ending June 30th, Figure reported a net income of $29.1 million on revenue of $190.6 million, compared with a net loss of $15.6 million on $156 during the same period last year. Basically, this company went from a loss of $15.6 million to now a profit of $29.1 million in a span of a year. That is huge. You're going from a loss to a profitable company. That is good. You want to have profitable companies. When you have this switch from loss to profit, that is amazing. Investors include Apollo Global Management, 10T Holdings, and Ribbit Capital. Despite the IPO, Kennedy will continue to control majority of the voting power, the filing shows. Okay, sure. And then Michael Tannenbaum, formerly with Brex and SoFi, was appointed CEO in 2024, tasked with guiding the company's public market debut and scaling its blockchain-based lending products. Beyond lending, Figure is pursuing regulatory approval for what it says could be the first U.S.-approved interest-bearing stablecoin structured as a security. First U.S.-approved interest-bearing stablecoin structured as a security. Whew, that's a market. That is a mouthful right there. Figure's offering follows a series of confidential filings over this year, market presentations. So again, trying to really get ahead of the game in the crypto stablecoin universe here with, again, looking at, it's from what this sounds like to me right here. This to me sounds like it's U.S. approved interest bearing. So again, deal with interest rates there, but a stablecoin structured as a security. So being able to use stablecoins as your, as a security, being able to maybe use as collateral potentially, maybe. I'm not really quite sure. I haven't read too much into it, but stablecoins is kind of what the major hype has been around a lot for this year for the markets. And that's why we've done so well. We had the administration has a lot of crypto based, regulations stuff that was really, really good for the crypto markets. So that's kind of what I think people are feeling, kind of moving towards. And the idea behind it, and people say, well, Fridge, what stablecoin? Like, why can't I just pay in the, use cash or whatever? The big point with cryptos and like stablecoins and these kind of things is that, you're able to send money and it's instant transactions. There's no wiring, there's no fees, none of that, or there's super small fees comparatively. So being able to send money instantaneously across the world with a super low fee compared to wiring money across the world and it taking 3 to 4 days, maybe, like that's kind of where we're going towards. And that's why people are getting a lot of hype behind stablecoins and using cryptos in general as payment methods. So that's kind of what the logic is there. And so, in addition to loan products, Figure recently rolled out its IntelliDebt solution, which has already helped customers pay off $133 million in debt by consolidating credit cards, auto loans, and personal loans into single payment structures. Kind of like what SoFi does. I believe SoFi also does a lot of restructuring and consolidating and things of that nature. And being able to help pay off that is amazing. And IntelliDebt, again, education being brought to this platform here, I think is amazing. So Figure IPO, I'm kind of tempted to get into, even if I can, because I got caught, flipping bullish shares, which was, everybody did that, I think. But Figure seems like a really, really good company to go into, and that's not financial advice here, but with them using, AI to help boost, their productivity, with using blockchain to be able to use it for lending and stuff like that. The housing market obviously is never going to go away. They're kind of following this idea of SoFi essentially, and then rolling out, again, educational information as well is something that's very, very useful, and people will go to the platform even just for the educational aspect of things, right? So even if they don't want to do a HELOC, but they want to do consolidation, this is another platform where they can get a consolidation for it. So I'm very, very excited to see where these prices come in at for Figure's IPO. But this company going from net loss to net positive is awesome to see as well. They're growing, they're expanding, and that's what you want to see as an investor. So very nice. The second one on the list here is Klarna. Now, Klarna is going to be looking at doing their IPO. You probably know about what Klarna is because it's one of the most popular buy now, pay laters we talk about here. So they're going to be looking at doing an IPO as well. Now, as we get into this one here, so again, in the filing on Tuesday with the SEC, they're going to offer 34.3 million shares, priced between $35 and $37, and it's led by Goldman Sachs, JP Morgan, and Morgan Stanley. It's been a long time coming. Klarna has been one of the big winners of the early pandemic era's online shopping boom, again, because it's buy now, pay later. So people had to buy things, but maybe they weren't working. So the buy now, pay laters do really, really well because you can pay it off in increments if you make some money on side jobs, Uber Eats, DoorDash, whatever the case is. They were seeked as high as $45 billion of valuation, but it got significantly reduced because everybody was not at home anymore. COVID restrictions were lifted and everybody was working again and all that kind of stuff. And people weren't using buy now, pay laters as much. At its current target price, the company would have a valuation of around $14 billion. So again, you're looking at about, 3 to 4, times under the peak valuation back in 2021. It's going to list it on the New York Stock Exchange under KLAR, and you can take a look and see how the revenues have been growing over the years, which is absolutely amazing. Again, having the U.S. revenues seems like the U.S. is in the dark green there. You've got Germany still increasing. You've got United Kingdom still increasing. Everybody, Sweden, same thing, and the other countries as well. Like you're still going to be seeing a lot of people use buy now, pay later, just like Affirm does. And if you think about what Affirm does, Affirm has been on a rocket this year, up 43% year to date in this market right now, which is crazy. Affirm and these kind of buy now, pay laters, people are going to be using no matter what. Just how it's going to be, I feel like, in this case here. So earlier this year, Klarna reportedly put its IPO on hold in the wake of economic uncertainty brought by President Donald Trump's tariff regime. And that is true. I remember making a video about IPOs that were holding off because of these tariff uncertainties and the economic uncertainty that we're going to have here in this case. It's not good to go IPO if you have no idea where the market's going to go. If our market tanks 5-10% after this tariff uncertainty, that's why would you want to go IPO on that one? Because it could come down another 5-10%, and then you lose all your valuations. You got to structure your IPOs at a strategic time. And so they pulled it back for now, and now they're going to be going IPO later on this month here. So very, very interesting to see. But since then, a number of well-known tech companies have gone public with market success, including stablecoin issue Circle, Figma, and Bullish. Now, before we get into these ones here, okay, and IPOs are always risky here. First of all, Bullish has gotten rug pulled so bad right now. Not rug pulled. I want to use that word. That's more crypto meme coin stuff. But this thing opened up, and it went as high as, even about, that's like $80 share. When it first opened, it was like $118. It pumped up to $118. I cashed mine out at about $100 or so, and now it's down 50% since I sold my shares. So the hype died down very, very quick for Bullish here. It's only been live for not even a month, and it's already down to about $50 per share. Still up on compared to the IPO price of $34, but a huge rug pull, which obviously is not anything to be too excited about here. Again, rug pull is kind of I feel like a little bit more of an overestimate, but I mean, again, imagine buying at 118, now it's $51, right? So the IPO hype dies off. And Circle, same thing. Circle had a huge momentum pump after IPO with the stable coins, all that kind of stuff. It went up as high as $260, and now it's down about more than half of that. It's down to $113. I think they had earnings that didn't do too well, maybe. Oh, they actually did pretty okay. I don't know why it's been going off like this. I'm not really quite sure. Maybe people are starting to realize that the hype is dying off for Circle. I'm not really sure. Figma, same thing. Figma, pumped up to as high as $100 and something a share, and now it's back down to about $50. So again, things to keep in mind about is that with these IPOs like Circle, like Bullish, like Figma, the hype can die down relatively quick. So they're always very risky here. So that's what they're talking about here with having these big pumps here. But it could come down really quick. Despite those and other listings making headlines over the last few months, the global tech IPO market has remained muted. Proceeds from tech IPOs generated $6.3 billion in the second quarter of 2025, compared to $34.9 billion in the same period in 2021. There's a lot of IPOs that came out in 2021. We're coming out of COVID. The restrictions were being lifted. People were like, public. I gotta go public and start raising some money, raise some capital, and just everybody was IPO. I'm pretty sure in 2021, it was crazy. Founded in 2005, Klarna said it generated revenue of $2.8 billion last year, eking out a net profit of $21 million. That's compared to revenue of $2.3 billion and a net loss of $244 million the year before. Again, going from a loss to a profit is definitely a good thing, right? That means they're starting to be able to, they've figured out a business model to make sure that they can structure themselves to go from a net loss to a net profit. And that's actually a pretty crazy turnaround here. Going from a net loss of almost $250 million all the way up to now we're profitable here as a net profit. That is absolutely amazing to see. And Klarna is one of those ones where, again, just like a firm, if the market goes down and, the job market is absolutely like in the crapper right now, if people aren't working, you got to still pay for things. What are you going to use? Buy now, pay later, right? They're going to use those kind of, apps where saying, hey, pay for it in 4 equal installments of whatever, instead of using the credit cards with like 25% interest on it, they might do 4 payments of it over the next couple months or whatever the case is until they find another job. So in a downturn like that, when the market might be going down, these buy now, pay laters are still going to be able to hopefully make money. Obviously, there's some risk to it because people could not pay it off. But, there's always risk to any kind of investment you get into. But buy now, pay laters can still do very, very well, even with an economic downturn, because people still need to pay for groceries, pay for gas, pay for this, pay for that. They need these things to survive. So that's kind of the thing about Klarna is the one that I've actually been really, really looking into maybe getting into potentially. Maybe like a couple of shares if possible. I don't really quite know, obviously. The next one that we have. So the next one that I want to look at is Gemini. Now, as we know, Gemini is a crypto exchange. So crypto exchange, Gemini plans to sell 16.67 million shares between $17 and $19, which is really, really all right. They would raise 316 to fetch a valuation of 2.2 billion, and everything else. Kind of going back to the idea as to what happened with, Coinbase. When Coinbase went public, it was valued super high. It crashed down to like $50-$60, and now it's on the recovery period here. And again, the problem with these kind of companies that you're getting into, with crypto exchanges, is that you're really banking on the crypto market as a whole. If we get another crypto winter, which we always say, like the winter times, the crypto usually kind of sells off. If we get one of those, the Geminis, the Coinbases, like these ones are going to be taking the biggest hit here, right? If Bitcoin sells off, those kind of things, right? We don't really know. So they're going to be going under the ticker symbol GEMI, founded in 2014. Enters the IPO fray at a time when several crypto and fintech companies are also testing the waters. Klarna, Circle, Figure, just like we talked about from before, things that are very, very important. Again, stablecoin issuer Circle went public, and they jumped 168% the first day. Bullish did the same thing, but then it kind of came back down afterwards. Crypto exchange Bullish and trading platform eToro have launched IPOs. I didn't even know eToro even went public, honestly. No one told me about that one. So Gemini has endured a rocky path toward recognition from the U.S. regulators. The SEC charged Gemini in 2023 with selling unregistered securities, focusing particularly on its now defunct high-yield product Earn. The product caused a rift with crypto investment firm Genesis, which paused withdrawals on the platform and volatility. In late 2022, presumably a ripple effect from the collapse of FTX. Woo! I remember the FTX days. That news was crazy. Gemini argued the pause kept investors from accessing millions of dollars. Okay. Because the firm later agreed to return at least $1.1 billion to its earned customers through the bankruptcy proceedings and paid New York's Department of Financial Services $37 million in the related settlement. Okay. The SEC and Gemini, meanwhile, requested a 2-month pause in the suit in April. Okay, cool. Gemini has more than $18 billion of assets on the platform, according to its Tuesday filing. The crypto firm generated $142 million in revenue, up from $98.1, which is good. It reported a loss of $282.5 on $68.6 million over the first 6 months of 2025, compared with a loss of $31.4 on $74.3 million in revenue between January and June of last year. Okay, so that is not good. All right. So, yes, there's hype behind crypto. Yes, there's hype behind everything with crypto related right now. Okay. But it reported a loss of $282.5 million on 68.6 million revenue over the first 6 months of this year. Compared to last year, they only lost 41 million on 74 million revenue. So the revenue went down from 74 to 68, and their losses went up from 41 to 283. Yeah, I'm gonna stay away from Gemini for now, and there might be some pump and dump to that one, first day IPO. People love crypto, stuff like that. I'm not touching Gemini at all. Loss of a company, or not having a profitable company with a loss in this case. And not only that, but the loss is accelerated like 7x from 40 to 280. It's a 7x, crazy increase in the losses, and their debt and their revenue went down. Yeah, not touching Gemini right now until we can see some actual good numbers that come out of Gemini. And the last one that a lot of people I don't think really know much about is Via Transportation. I had to look into it a little bit. They are also going IPO. This is the fourth and final company that's going IPO here. So they are a startup that aims to reimagine public transit, has filed for an IPO. The latest tech-focused company seeking to take advantage of growing investor interest in new listings amid a recent wave of high-dollar exits. Basically, what their hope is the hope that they can get on the wave of everybody sees IPOs and they start filing for shares, requesting shares, all that kind of good stuff. And they want to take advantage of that at this moment in time. The New York-based firm and some of its existing shareholders plan to offer 10.7 million shares, targeting a range between $40 and $44 a piece. At that price, the company would have a valuation as high as $3.5 billion. So again, not a major company, a smaller company, $3.5 billion valuation here. The offering is being led by these companies here. Okay. It comes as more high-profile tech companies are moving forward with long-awaited IPOs after tariff uncertainty has prompted caution, which again, also Klarna talked about as well in that article there. The tariffs push back a lot of IPOs. Now it kind of feels like tariffs are just whatever. They're being held up in court right now as if they're legal or not. So now there's going to be going to the to the U.S. Supreme Court and all that kind of jazz. Absolutely wild. So the market's kind of just like, let's just keep going. Why not? Until any breaking news happens. Just yesterday, buy now, pay later. Klarna said it will go to public as well. Chime went public, I know, recently. Figma obviously was public as well. What do they even do, though? Right? Good company to think about what they even do. You want to invest in them, right? So Via partners with local governments, which to me is already a good thing to see if the local government here, and public transit agencies to offer a range of transportation solutions, including operating software, passenger apps, tech-enabled services, and data. The fact that you're partnering with government is kind of reminding me of like Palantir with the government in defense, right? If you have government contracts, you're going to partner with the government. That means something, right? It's not just like you're partnering with random people. Being backed by the government is really, really nice. The company, which says it makes 90% of its revenue from government partnerships, operates a platform that is available in large cities like New York and London, along with rural areas in places like Montana. So basically being used everywhere. It's not just for major cities, but it is nice to they are used in those major cities like New York and London. For too long, public transit services had relied on 40-foot buses following circuitous. Oh, good. I am tired of reading that thing at this point, but I want to bring the information to you guys. So the founder said in a prospectus filing with the SEC, we had a new idea. We were going to replace these underutilized buses with dynamically routed shuttles guided by data and powerful algorithms. Powered by data means there's probably going to be something with AI coming into this, I'm guessing, but that's just me. Are they profitable? Not yet, but the losses are narrowing, and that's a good thing, right? Unlike Gemini, whose losses accelerated, Via Transportation is actually narrowing the gap here. In the SEC filing, the company reported a net loss of $90 million in 2024 compared to $117 the year before, which is good. They're narrowing down those losses, as we know. It warned in the filing that it may never maintain or even It warned in the filing that it may never maintain or even achieve profitability. What? Okay. Interesting. That's not uncommon for a rapid growing startup. Obviously, as we know, they burn a lot of cash trying to grow and expand, and they can hopefully see profitability later on down the line. Via said its revenue ballooned from $100 million to $337 million between 2021 and 2024. And that is, again, pandemic, post-pandemic, opening up. People want to go outside, go touch grass, get some fresh air, those kind of things. People are out traveling, makes a lot of sense. VIA Technologies plans to list its shares on the New York Stock Exchange under VIA. It has not announced a listing date, but said on Wednesday that it has begun the launch of its roadshow. Okay, so what are my takeaways here? And we'll be good to go here. We'll wrap it up here. Longer videos. So if you made it this far, thank you guys so much, obviously, for watching this far and listening to me talk. So companies that out of these four, two of these I would really be interested in getting into: Klarna and FigureTech. Personally, not in financial advice. Why Klarna? Why FigureTech? FigureTech has gone from net loss to net profit. That's a good sign already from last year, or from the first 6 months last year to this first 6 months this year. That's very, very good to see. They're a profitable company. They're doing, they're expanding their HELOC from $400,000 to $700,000, which gives you a bigger pool of mortgages from people who are homeowners. Absolutely amazing. They have blockchain keyword there, using AI keywords there. I think they're going to do some really good things potentially in the future. I wouldn't mind getting into FigureTech. Klarna, same thing. Buy now, pay laters. Affirm does well. Everybody's going to be using buy now, pay laters. That's how it's always going to be, with inflation, with markets, with labor to downturn, those kind of things. Klarna could do very well long-term, I think, as well. Again, going from net loss to net profit is a really good switch to see that you are becoming profitable. And once you have that switch, it makes sense to go IPO. Staying away from Gemini. Gemini is bleeding cash, left, right, and center. Okay, their losses are 7 times more this past year than last year, and their revenues are down. And again, they had lawsuits, stuff like that. I don't think Gemini's going to do well. Just because it's a crypto hype, I wouldn't get into it. Just like Bullish, how Bullish had the crypto hype to it, pumped up, but then they sold off recently. I wouldn't touch Gemini with a 10-foot pole. And the last one, VIA Transportation, is one I would probably wait on the sidelines for a little bit to kind of see what the market sentiment is with this one. Because their losses are narrowing, which is good, but they're still not profitable yet. And being, set at a $40 share price where I could just buy FigureTech for $20 or whatever it was and Klarna for $30, I'd rather buy shares of those two than VIA Transportation whenever they go public. So I'd be curious to see what they finally go public at and what the market reacts to it. But that's kind of like my takeaway from these 4 IPOs. So thank you guys so much for watching today's video. If you did make it this far in the video, make sure that you like the video, subscribe to the channel, turn on the notifications for all future uploads from Fridge Financials. Hope you're making money in the market, and if you're making money in the IPOs, please be careful, please be safe, please be cautious, because you never know what the market will do to these IPOs. I hope you're making money in the market, and as always, I will catch you guys in the next video.